Absolutely. Thanks for having me. We own 1,112 buildings across 47 states. They're leased primarily to Olive Garden. We have about 300 of those. Longhorn Steakhouses. We have about 100 of those. Chili's, Buffalo Wild Wings, and other prominent brands. We also have exposure in the medical, retail, and auto service center. That means urgent care, primary care, veterinary centers, tire stores, collision repair, and similar concepts that are in retail areas. In the last few years, we've averaged about $290 million of acquisitions a year, buying about 115 buildings. We press release those acquisitions the day they close so you can follow along with what we're doing. We have an investment grade balance sheet, and we pay out about a 5.7% dividend. So we spun out of Darden Restaurants about 8.5 years ago. I was on the board of Darden, and they asked me to look at their real estate portfolio. We sold a number of buildings individually, and then we spun 418 properties into Four Corners. Since then, we've acquired a number of properties, as I mentioned, but our initial portfolio had very reasonable rents. Today, those properties cover their rents about 6 times. We started with very low leverage, which is something we've maintained, and overall we've maintained a conservative posture around the kinds of acquisitions we do, keeping our overhead low, et cetera. Sure. I'd point out a couple. One is interest rates, which is obviously tied to our acquisition cap rate. So as interest rates have edged up here, our acquisition cap rates are more favorable. Tenant credit. So what's the health of our tenants? And that's been very, very strong. I think out of over 1,100 properties, we only have a handful that aren't paying. Demand for retail space and the kind of retail space that we own specifically is very strong today. And then replacement cost, which is how much does it cost to build a building, and therefore how likely is it for a tenant to move from one of our buildings to another. And again, replacement cost has gone up substantially since we spun. And so that means we have a very sticky tenant base that stays in our buildings and pays rent. So we are 99.8% occupied, and notably maintained a very high 99% occupancy ratio through COVID. Honestly, I sleep pretty well. We spend a lot of time working on the culture of the company. We're 8 years old, trying to maintain a entrepreneurial, creative workforce. But overall, the portfolio of 99.8% occupied has been consistently for the last 8 years. And very well covered dividend, investment grade balance sheet, no near-term debt maturities, overall very conservative. We really benefited from spinning off from one of the best restaurant companies in the United States, Darden, with brands like Olive Garden and Longhorn that do far in excess of the business of their peers. Darden itself has nearly a $20 billion market cap, so that half of our portfolio is really strong. And as I mentioned, covers 6 times their rents. So industry leading in that regard. I would say we're a relatively new portfolio. So we were created after Amazon, after the smartphone, after electric vehicles. And so our portfolio reflects that. So we don't own tenants that sell things, general merchandise that would compete against Amazon. We don't own gas stations that would be impacted by electric vehicles, things along that nature. We have top decile corporate governance and have since our inception. And we've won awards for our investor disclosure. It really allows the investor to follow on what we're doing to make sure that they consistently agree with our strategy. We have a very analytical approach to acquisitions, so we score assets on a 25-point criteria. We've scored 30,000 buildings in our existence and winnowed that down to about the 700 that we've actually purchased. And we do a lot of work. We produce an investment memo that goes to our board for every acquisition, things along that nature. And then I think the last thing I would say that's different than when I started my career is we're very technologically enabled. So we use a program called DealPath that allows us to process buying many properties per year. It keeps us very efficient. It allows for a very transparent approach. Everyone at the company can access information about the properties 24/7 and remotely, and it's kept us very efficient. So in all the properties we bought, I should say, we've never dropped a deposit, for an example.